We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodjovics. Joining me today is Chris Irons, host of the Quoth The Raven podcast and author of QTR's Fringe Finance Substack. How are you today, Chris?
Good. Happy to be with you, Tom. Been enjoying your content on a near daily basis. Loving your podcast still.
Well, I appreciate that. The feeling's always mutual, Chris. You know, you have some excellent guests on your podcast as well that I can't seem to get a hold of, but it's good to be able to get the different points of view from the different hosts, right? To be able to kind of present those ideas in a little bit of a different way.
Yeah, the way it feels for me is like my podcast is, I've warmed up a lot of people for like more serious podcasts like George Gammon, you know, guys that actually know what they're talking about. So I see a lot of my guests trickling on to these other podcasts, which is actually good because, you know, I love George and, you know, I love your podcast because guys like you can look at things in a comprehensive way that sometimes I can't. I take a more bird's eye view. I take a simple view of things a lot of times. And so my guests' answers are usually commensurate with that. And I enjoy listening to the complexities a little bit more on some other podcasts. You know, you got to kind of stay in your lane. And I'm not a guy that can break down the Eurodollar system to a T and explain it the way like George Gammon can. You know, I think what has served me well as an investor and kind of what, you know, I don't know if you want to call it my strategy or whatever it is kind of look at things simply through the lens of common sense. And that's helped me kind of shape my investing strategies and my ideas on macro. And, you know, but also it can be an Achilles heel of sorts because there are complexities that you have to look at. And you do have to look a little bit deeper sometimes. So, you know, to them, they're due. And to you, definitely, you deserve a lot of credit because you obviously do a ton of research where you have people on and your guests are very comprehensive, which I really appreciate.
Well, as usual, I appreciate that, Chris. And, you know, I think there's a big difference between you and I just simply because I feel like I have to do the research to make sure that I can really dive deep with some of the guests and help them explain that thesis to our audience. But I appreciate your style as well, because like you say, you have that ability to kind of look at things from that 5,000 foot view. And, you know, that struck me with your conversation with George the other day. Why don't you tell us about some of the themes that you see developing in the world? You know, you guys were speaking about China possibly trying to kind of weaken the US while it's already in a weakened state here with their COVID policies that don't seemingly really make any sense to the rest of the world.
Well, you know, and just to add on to what we just said, you know, I kind of pride myself on doing as little work as possible. And, you know, I don't mean that as an affront to like people that subscribe to my Substack or listen to my podcast, but you know, I wouldn't really want to be doing either of those things if I didn't enjoy it. I wouldn't want to go through the motions of writing a blog post every day or putting out a couple of podcasts every month if I didn't enjoy it. And I think a great way to ruin that for yourself is to make it some super intense obligatory process where you feel like, you know, you have to dive into shit you don't want to talk about. And, you know, I would rather just be honest. And somebody that was criticizing my podcast the other day even wrote in the comments, you know, this guy doesn't care if anybody listens or not, you know, and that's really the truth. And so I'd rather just be upfront about that and just tell you, hey, I'm kind of just winging it. But, you know, I feel like I can talk about whatever. And, you know, if I don't know the answers, I'm not going to bullshit you and say I know them. I'm going to say, hey, we should talk to somebody that knows. Okay, so on to George Gammon. You know, one of the things that I have been writing about since I started my blog in August of last year, and one of the things that I feel really strongly about is the idea that China is eventually going to challenge the United States as a global economic superpower. And, you know, this was an idea that I had started writing about in August of 2021, which is long before the Russia-Ukraine situation happened and long before we got the bad inflation numbers that we started getting around December or January, you know, 2021 into 2022. And one of the things that I was reading about last summer was this idea that China may have more gold in reserve than they let on. And actually, this is something you were just discussing a couple of days ago on one of your podcasts with somebody who, I forget who it was, but somebody who was saying, hey, what's going to happen if China comes out and says that they have 20,000 tons of gold and they tell the world this? So going on, as I do, with the help of a lot of other people's work from last year, a lot of metals experts who brought up this idea that they may be underreporting their gold, that kind of gelled very well with the long-held belief that I've had that I think China will eventually, and I think this was happening before the Russia-Ukraine situation, I think they're eventually going to want to have a sound currency that is backed again by gold. And I arrive at this conclusion in a pretty general type of way, other than reading what metals experts write. I'm obviously not a metals expert, but I spent, the better part of 5 years analyzing U.S. listed China-based companies that, were allegedly committing all types of fraud on U.S. exchanges. And I helped produce research on that. And what I gathered from looking at all these different companies who really were committing billions of dollars in fraud, the general sense that I got from that and from working with and speaking to Chinese nationals about the Chinese government, about the way business is done in China, is that they're generally just shrewd business people. They're generally a little bit more concerned with the basics, the fundamentals, the things that we ignore, that you kind of throw out with Keynesian economics or modern monetary theory. And they're generally just a little bit sharper than we are. And they're a little bit more ruthless as business people, definitely, because there's really no other way to describe, listing publicly traded companies here in the U.S. that are just straight up fraudulent, that don't exist, with straight up false numbers and absconding with billions of dollars in U.S. invested capital, and there being no repercussions for it. It's basically just a raping and pillaging, or it was, during the reverse takeover times into, it's still going on to some extent today. But, from that, I started to kind of get a feeling of, hey, we kind of need to respect their acumen and their willingness to kind of be shrewd and be ruthless when necessary. And I think that, after reading a lot of Chinese macroeconomic plans that usually go out 10 years, 15 years, 20 years, when Beijing comes out and says they have a plan for the country's economy, it's always measured in decades. Unlike the US, where, we're focused on like, what can we do tomorrow? And that's it. But reading those things just gave me the sense that China takes the long view, and it's more important for them to kind of secure their financial health and their economic soundness for years, decades, generations to come. They're playing a little bit longer game than the U.S. is. And it was kind of from that the idea, the idea of sound money and Austrian economics always made sense to me. But it was kind of from that, it's really easy to kind of come to the conclusion that eventually China might want to back their currency with something finite. They might be interested in eventually dethroning the United States as an economic superpower. So I started to write about that last year. And then all of a sudden, this Russia thing happens, where Russia invades Ukraine. And now it becomes way realer than it was. Back in August 2021, I wrote that article. I got laughed at by a lot of people. China's going to back the digital yuan with gold. Like, what the hell are you talking about, right? And what are you basing it on other than, I guess, what you would just call a gut feeling? I'm not rolling out charts and graphs here for you or for your listeners. But now, all of a sudden, 6 months later, you have Russia invading Ukraine. You have the West taking unprecedented steps to sanction Russia economically, basically including just seizing their reserves and just saying, hey, you're no longer a part of the system that you once were. And, you have a couple things happening, as many of your guests have pointed out. You have Russia, who is allying themselves with China more to do business with China. You have, a Chinese interest in purchasing strategic Russian assets, which I think is very shrewd. Again, this goes back to the Chinese being shrewd. If you can give the Chinese a chance to secure strategic commodity assets like Russian oil assets for decades to come, well, that's a no-brainer for them. They don't really give a shit what the West thinks. If it upsets President Biden, that's a bonus. That's not a deterrent. But yeah, they would love to have an interest in that oil. Russia needs them because they need a partner to continue doing business with. And they both have the shared mutual interest of potentially taking on the U.S. and the dollar economically. So what was once a speculative kind of pipe dream written by, a guy like myself, probably drinking my third Miller Lite in my apartment in Philadelphia somewhere, speculating about a Chinese digital currency being backed by gold, now all of a sudden looks like it really could be far more of a reality than we ever thought. And I think what's going on now is we're in the process. Look, I learn a ton from your guests, so I'm going to try to not regurgitate as much as I can from them. But you're one of my favorite sources of information. As your listeners probably already know, there's this idea of, a Bretton Woods 3 and a global monetary reset and a debt jubilee and all this happy horse shit. But basically a big seismic shift on the global monetary landscape. And it really looks like it's setting up that way. You have Russia, you have India, you have, Saudi Arabia potentially putting an end to the petrodollar. You have China. And then on the way in the West, you have the U.S., you have the European Union, and all of our friends that are piled into that clown car with us. So I think if I had to sum everything up in what's one big theme, what's one big macro issue that you're looking at, not to over-egg the pudding, as my friend would say, but I think we could be on the verge of one of the biggest seismic economic shifts in modern monetary history. Mm-hmm. And, take that with a grain of salt. This is coming from a guy that's currently wearing a Hawaiian shirt who's sitting on the beach right now. But that's certainly, when you squint your eyes like one of those, magic eye posters that you see where you have to stare at it really long and then until you finally see the picture. If you squint your eyes and you kind of take a step back, it really does look like the whole global monetary system is in the beginning stages of this bifurcation. And I think that's going to mean some serious shit going forward, the likes of which I don't expect our government or our Fed to understand. I mean, they don't even understand inflation in general. So how the hell would you expect them to see, inning one of a 1,000-inning baseball game where at the end, we're going to be down 1 million runs to 0? How do you get them to look at that from the very, very first beginning stages? But I think that's what's happening. And I think a lot of people, Luke Groman, on your podcast, you did that awesome podcast with him when the whole Russia-Ukraine invasion first happened. And I think he just nailed it. I think, people like him who see this way ahead of time, I think these people are spot on. And like the issue we're having with inflation now, Tom, it's going to be one of those issues where the government is going to swear to us up and down that it's not an issue until it's too late. So this week, what am I preparing on my blog? I'll be, publishing a piece over the next day or so. Just about Janet Yellen's incompetence. What did she do this week? What did Janet Yellen do this week? She did two things. One is it broke in the news that she may have asked Joe Biden to curb his spending on the Build Back Better bill, which of course would be totally reasonable. But she had to come out and defend that she never said that because, that's the ultimate Keynesian insult that you would ever tell somebody to spend less. Mm-hmm. So she did that. And also this week she made a mea culpa with regard to inflation, basically saying, I don't understand it. I never understood it. And I got everything wrong. And so these are the people, cut from the cloth that you're expecting to have the vision to look forward and see this giant Pangea kind of, disembarking of these two massive global economies kind of happening on a global scale. You want them to see that? You want them to see the first cracks? I don't think it's going to happen.
Mm-hmm. So, Chris, I remember, for those of our listeners that want to maybe know more about what you were talking about your analysis on Chinese stocks, there was an excellent movie that you were actually in. And can you remind us what it was called?
The movie's called The China Hustle.
Right.
I think it's on Amazon Video right now, or Amazon Prime, whatever it's called.
I remember seeing it on Netflix as well, but it's really interesting to be able to see exactly what you were talking about these companies in some ways that don't really exist within China, but yet there's all kinds of U.S. capital being invested in them, right?
I would definitely suggest that all of your listeners watch that movie if they can find it. And it's not promotional. I'm not even in it. I'm in it for a half of a second. Somebody asked me a question. And I'm like, yeah, and they just cut me off. Mm-hmm. But the movie follows Dan David and Carson Block and a couple of these other people that were some of the first to help identify a lot of this fraud that was going on in the Chinese space, and kind of lays out everything top to bottom, how they kind of discovered that the fraud was taking place and the types of research that they've done to help identify it and disseminate it. And then really it takes a look at kind of the inaction that we've had from a regulatory standpoint as to, how we have not combated it. And so I think, if you're new to fraud from U.S. listed China-based companies, that's a concept you never heard before. Watch a movie called The China Hustle. It's like 80 minutes, and it breaks it all down beautifully. And then from there, maybe go back and look at your macro stance on China and Russia and what you think is going on. Because, I'm not an expert, right? I'm not a CIA Chinese government analyst. I'm not a, Xi Jinping profiler, but I've done enough. I've worked enough on China-based companies to have probably a little bit better of a feel for the country's ethos than the average person. Mm-hmm. So that's kind of where, my foundation of what I base this on.
Yeah. And Chris, to your point, I've seen some estimates of China holding something like almost, close to 40,000 tons. And obviously there's going to be a range of what their gold reserves actually are. But a lot of that, like almost half of it, I believe, is held by their private citizens. And, right. You wrote recently about the attack on a lot of the rights of the citizens. Obviously, gun control is the one that's foremost in the news right now. And you also tied that to the idea of the attack on people's ability to own gold in that recent piece on your Substack. So what does that mean for your average person that owns gold and maybe gold miners?
Well, here's another concept that you've discussed ad nauseum on your podcast. A lot of my familiarity with it and the conclusions that I've personally drawn on it, which aren't much different from your other guests, have come from listening to people like Lawrence Lepard on your podcast, who I know specifically I listened to a couple months ago and said they're going to come for your gold. But, I was inspired to write that piece last week because the raging debate in the country right now is once again over gun control. And putting aside how you feel about the horrible tragedies that have taken place, with the mass shootings, and putting aside how you feel about the nuances of, what should and shouldn't be required in terms of owning a firearm, put those things aside and just think about the idea that, in some way, the government is going to try to walk the line a little bit further. Jordan Peterson had a great speech where he described this. You kind of push and push and push a little millimeter further, a little millimeter further, a little millimeter further. Then you stop, you rest, you give the public a place to breathe. But all the while, every time you kind of advance the ball a millimeter further in terms of taking a little bit more of somebody's civil rights, right? At first, it's, the right to own any guns. Then it's okay, well, we don't want machine guns. Then it's okay, we don't want military-style guns. Then it's okay, we don't want, we don't want bump stocks. Then it's okay, we don't want magazines with over 10 bullets. Okay. Then that's another discussion. And I'm for what I believe to be reasonable gun control reform. I'm not a 100,000% purist, but I'm also very worried about the idea. I think people need to understand that once your rights are taken, they are not given back. End of story. Mm-hmm. When it comes to something like what happened after 9/11 and the way that U.S. citizens and global citizens have to navigate things like airport security now, things will never return to the way that they were. Mm-hmm. So every millimeter the government takes a little bit further, that's theirs forever until it gets to a point where the populace really feels backed into a corner and they feel like, there's a revolution or something on their hands. And that's, I think you got a whole nother can of worms.
Mm-hmm. It seems that there's never a perfect answer that's going to please everyone, right? And especially with the politicization and the polarization obviously, let's just talk about the West because that's what we're most familiar with. But, the idea that people should be given more responsibility and held to a higher standard, I think that is never going to be a bad thing to make sure that we, hold on to our rights.
at least it's the most equitable sounding thing. It's
Mhm.
the way to not kind of proceed down the slippery slope, right? It's a way to just hold your ground and say, hey, and the way that you do that is you afford people the rights that they have now, or, the rights that they're afforded under the Constitution. And just like you said, you increase the personal responsibility. This is your traditional, like, conservative versus liberal argument, right? Conservatives nowadays, they want less government, more personal responsibility. And people on the left generally want more government and, the government to be responsible for their well-being, things like that. And so, yeah, I think if you're going to do that, then you have to raise the bar for accountability. And that's why I think ideas like, holding parents accountable for things like this are not bad ideas. But let's go to gold, because I'm trying to make a bigger point, and I don't really want to talk too much about gun control, other than, I'm a gun owner and I'm not interested in relinquishing my handguns. But as I write in my piece, I explain my reasoning for being a gun owner. And I think that when it comes to gold, you got to look at gun control like this. In Australia, where they had those draconian COVID lockdowns, there was a discussion within Australia's government to decide to implement those lockdowns in the way that they did, and the way that resulted in, people walking through the park, walking their dog, getting beat down by batons for not wearing a mask, right? So that was a conversation that politicians in Australia had to have at some point. And they arrived at a cost-benefit analysis that, these plans that they wanted to implement were going to be worth it, and they were going to be effective, and they weren't going to be a major, profound risk. In the United States, however, when that discussion happens, at some point, the government has to tuck into their cost-benefit analysis of, whatever type of lockdowns, whatever type of control they're trying to exercise, that, we're a nation of gun owners with 300 million guns. Now, am I saying that, people should rise up and shoot the government? No, of course not. But what I'm saying is, somewhere on a footnote of an analysis, in the back of the minds of the people that are actively conspiring to try to usurp civil rights and exercise a little bit more control, they have to come to terms with the fact that we're a nation of gun owners. And so, at some point, there's a line where, that becomes really important. And in Australia, when you don't have to think about that, I think, the difference may not be extremely profound, but I think you're just a little bit less in check than in a place like the US. Okay, so where am I going with this, right? That is an example of, a way that forcing Americans to turn in their guns, or, say we were to try to implement a blanket gun ban, which I don't think would ever happen, but something like that would be a way to tip the scales of control and leverage a little bit further in favor of the government and a little bit less in the way of the people. Hillary Clinton, great example of this, I wrote about last week. She wrote on Twitter, "No one should ever need an AR-15." And I did a 4-second Google search for her and her security detail. And the first thing that came up was a report from 2011 when she was Secretary of State on CBS detailing what her personal security detail looked like. So this is like, when Secretary Clinton goes for a little trip in Manhattan and she's, going to the UN and she's shaking people's hands and she's doing Clinton Foundation shit. Who is accompanying her? It's a guy with a big ass machine gun, and there he is right on film, holding a machine gun, protecting her as she gets out of her van in New York City or whatever. So it really isn't, nobody needs an AR-15. It's, hey, politicians might still want those for protection. And then from there, you have to shoehorn the question open like, all right, well, who are politicians? Well, really, they're just average American citizens. They don't have superpowers. They're, these people are elected representatives of the people, so I don't value their security more than I value the security of somebody in North Philadelphia that's living on welfare, that's neighbors of a friend of mine. To me, neither one of them has a right to a certain type of personal security that the other person doesn't have. So let's take that argument now, okay, in saying like there's a little bit of hypocrisy there, and there's a little bit of a balance of power that shifts when you take the guns out of the equation. And let's apply that to gold right now, okay? So what's going on, right? What did we talk about when we first started the call? The fact that the global monetary system is in the midst of experiencing what I believe is a giant reset. And out of that reset, it seems to be unanimous, not only from, people that analyze these things and economists and people that you hear on your podcast and stuff like that. Not only is it unanimous that like everybody kind of thinks gold is going to wind up backing the new global economy, the new global monetary system in one way or another. And then the question becomes, once that happens and whatever it looks like, whether it's the US saying we're going to return to some kind of gold standard, or it's China flipping over their cards and saying, fuck you, we have 40,000 tons of gold. However that happens, gold is going to be the commodity that if you hold it, you are afforded control, right? Your money is sound. You're going to have the ability to, toss around your weight on a global scale in a way that other countries that don't have gold won't be able to do. And I'm sure that system, especially if it's put in place by, the global elite, will benefit, first world countries. It comes down to an issue of control. Whoever has the gold is going to have the control. And even if, like I said, even if China surprises the world and says, hey, we have all this gold that we never told anybody about, it's going to be a mad dash for gold at that point. So even if it's not, a premeditated change, at some point, everybody knows it. Your listeners know it. Gold is king, and gold is going to become the answer at some point. So what that means is, in the future, in order to maintain some semblance of control, governments are going to need to have gold. And the more gold that they are going to have, the more control they are going to be able to wield, the more power they're going to be able to wield. And again, this is all bird's eye kind of analysis by me, and just generally speaking. But that offers up more than enough motivation for governments around the world to nationalize gold miners. And this is a topic that has been discussed ad nauseum on your podcast. So I don't want to repeat too much of what your other guests have said, other than to add that you can draw a straight line from where we are now with the global macroeconomy kind of undertaking this huge shift to nationalized gold miners. And I can do it. I think your guest last week said, like, I'm worried about this in 6 months or 12 months or whatever. I don't know if it's going to be that soon, but I don't think the idea of it happening over the course of the next 2 to 3 years is insane, right? So now you have these kind of two pieces of hypocrisy that worry me, with gold and with guns, because those are two things that empower regular citizens that I think the government has a vested interest in having control over if they want to maintain control going forward, and they want to continue to kind of abscond with people's civil liberties. So that was why the article that I wrote last week was kind of under the guise of government hypocrisy. Gold and guns, they're good for us, but they're not good for you, right? Hillary Clinton can have an AR-15 on her security detail. And even now, we can hoard gold in reserve for our central bank. But when it comes to the average person wanting to own guns, well, that's the problem. And when it comes to the average person suggesting that, we need gold to back our currency, well, they're a crazy conspiracy theorist. So I think that if people are long miners, like your last guest said last week, if you're long miners and miners go apeshit, and I do believe they will, I believe that eventually gold, I agree with your last guest too, and I wrote an article basically saying that, when the next QE happens, I think gold is going to go up, $500 to $1,000 an ounce in the course of, weeks. I don't think it's going to be a controlled bid in gold. I think it's going to be panic and a realization that, fiat is toast, the dollar is toast, and the Fed is just absolutely out of ideas and have no choice but to torpedo the currency. And I think when that happens, people are going to see insane gains in miners. But I think that there is a new risk. Miners are these great undervalued cash generating companies now, even with gold at $1,800 an ounce. And, I would love for my miner stocks to be annuities that I hold for 50 years and are spitting out dividends, 50 years from now when gold's at $1 trillion an ounce, and it costs $52 million to buy a cup of coffee. But I think that the idea of these companies eventually becoming nationalized needs to be officially placed into the risk section of people's analysis of owning gold miners when it may not have been in the past. Because I do think there is a very real chance that it happens. And, look, government here in the United States, their entire solution to everything, look at how they're trying to deal with gas prices right now, is more state control. They want more state control of the economy, more state control of the oil companies, and they think that that's going to help, the everyday American. And they ridiculously think that that's some type of pathway toward a solution for rising prices, which is sad. It's a sad commentary on how incompetent they are, but it also telegraphs their mindset going forward. And it kind of gives people the indication that, with gold, it really wouldn't be that insane for them to want to exercise state control over miners. It would actually probably be the most likely situation because, in their playbook of dumbass ideas, it's number one on the list. So I know that was long-winded, but thank you.
Well, Chris, what does that mean for a place like Canada that really has no gold reserves?
Yeah, it means they better get some. That's what it means. It means, all fiat is post, and the dollar, the U.S. dollar is in a precarious position, but it means the Canadian dollar is in an even more precarious position. Mm-hmm. And, with numbnuts Trudeau in office, I'm not sure that the Canadian government is going to have the aha moment that it needs to start to realize that they better start securing some physical metals. So I don't know what the hell is going to happen with them, but that's very worrisome. If I was a Canadian citizen, I would be concerned with owning physical gold. And then, when such time comes that the government tells you have to turn it over to them, not doing that, figuring out a way to secure it so that you don't have to participate in what is, of course, going to become another step in their playbook, which is probably trying to buy gold from their citizens. If it's a terrible idea and it's something that, you would expect a grade schooler to come up with that requires no complexity and no real thought about it. And, if it's just a bad idea, you can expect government to try to implement it. I joked on my podcast and said, it's almost like they have to exhaust all of the wrong solutions before they even get close to a right one. And this is what's happening with oil prices, right? I mean, with oil prices, what's the solution, Tom? The solution is bring more goddamn supply online. I mean, this is not some complex quantum physics, string theory, edge of human understanding problem that we're having here, right? We need more oil. We need more natural gas. We need more supply, and prices will come down. Okay, so you take that very basic answer and you deliver it to the Mensa candidates in the Biden administration, and what do they come up with? They come up with, okay, shut down all federal drilling leases, and let's see if we can release, basically what amounts to a drop in the bucket from the Strategic Petroleum Reserve.
That's supposed to be saved for wartime.
Yeah, and that's the other problem, right? Like, what do you think China is thinking watching us use our wartime reserves? Mm-hmm. They're thinking like, hey, if we want to invade Taiwan and the West tries to sanction us, not only are we going to have all the gold and all the, not only are we going to have the sound currency and the gold to be able to back our currency, but the U.S. probably isn't going to have enough fucking oil to get one of their aircraft carriers from California to China, in one trip, where we probably don't even have enough oil to do that. So they have to be laughing. Certainly, it's worrisome. I find the whole thing worrisome. I try not to be like super concerned about it on a daily basis because I just don't want to panic myself daily. I'm trying to focus on, enjoying every day. But I mean, you got to be hard pressed to look at this situation and not understand that, we're taking the precarious position we're in and we're making it worse on purpose. I mean, and all you got to do is say, hey, like, we just need to bring some oil supplies online. Let's incentivize refineries. Let's incentivize oil companies to bring new supply online. And you got Biden, fucking around with talking about fuel cells, and like hydrogen and solar. It's just like, for the amount of time and resources and investment that you have to put into projects like that and the yield that they're going to offer and the time with which they're going to be able to offer it, it's almost counterintuitive. You would almost be better doing nothing at all. But oil companies, they have the infrastructure, they have the land, they have the assets necessary to bring new supply online relatively quickly, and we can incentivize that. And so, instead of coming up with the simple solution to the problem, we've engineered a state-planned fucking Rube Goldberg machine that gets us from 1 inch from point A to point B by traveling halfway around the world.
Chris, it really seems like there's a never-ending stream of distractions here, whether it's the leaked Roe versus Wade opinion from the Supreme Court, obviously gun control, as we were talking about, or mentioning the possible plan to forgive student loans that's been floated several times. So why do you see this as an idea that's so misguided? And what would be the possible ramifications of this decision be? And if you could...
Student loan forgiveness?
Yeah, the student loan forgiveness. And if you could, maybe explain it as you would to a first grader or Stephanie Kelton.
Right. Look, student loan forgiveness is a policy issue that is going to require money. And the country doesn't have any money. So there's your answer. I mean, where is that money ultimately going to come from? First off, let's put aside the moral hazard of forgiving $10,000 per person in student loans when other Americans are burdened by things like credit card debt, mortgage debt, et cetera, in a rising rate environment. And they're getting squeezed too. So first off, we're playing favorites. We're saying if you went to college and you didn't pay off your debt yet, if you haven't done the responsible thing and aggressively tackled your debt, we're going to reward you with a $10,000 subsidy. That subsidy is going to ultimately, one way or another, be financed by the issuance and printing of more U.S. dollars. And as all of your listeners understand, and a first grader, and maybe even Stephanie Kelton can understand, that the issuance of more dollars results in the crippling of each dollar's purchasing power, which is why prices go up, because it costs more dollars to buy everyday items, and we have rising prices. So as the guy like Peter Schiff would say, rising prices are a result of inflation. They are not the inflation, right? The inflation is the expansion of the money supply. And so what happens when you forgive student loan debt? Well, one way or another, you're going to have to increase the money supply, which is the opposite of fighting inflation. It's creating new inflation. So on top of that, you have this moral hazard issue of, you're playing favorites with a select group of Americans who, as I wrote in my article, some of whom may not necessarily even need the quote unquote relief, if you call it that. There's probably lawyers and doctors and dentists that are making $200,000, $300,000 a year, but have deferred putting off their student loan payments because maybe they were hoping for something like this. I know a friend of mine has money in the bank to pay their student loans and has been advised by their personal financial advisor not to, specifically in hopes that there would be federal relief. Okay, so take that and multiply it by everybody that's got debt outstanding, and there's your behavioral incentive to not pay off debt, which is the wrong signal that you want to set. So, in essence, what's happening is the government, which of course doesn't produce anything, right? So it doesn't have any productive, capacity. So all the government is doing by issuing new money or taking tax receipts and using it to pay off other people's debt is taking your listeners, and everybody in the world, everybody in the country's purchasing power, and redirecting it towards a select group of people. And, we will bear the consequence of that. In addition to it just generally being like an unfair thing to do, just reaching over the table and just, theft, really. It's theft of purchasing power. But in addition to that, we'll all bear the inflationary consequences of it. So, when you watch a press conference, you watch a White House press conference and you hear this woman babbling about how the administration is doing everything that they can do to solve the inflation crisis. They're just not. I mean, that's just a lie. The worst part about this is, and really the punt in the nuts for the Biden administration on this issue, isn't just that it's an economically horrifyingly bad idea. Not only does it fly in the face of probably what the administration's number one goal is right now, to bring inflation down, but it's also shitty political strategy because, I don't agree with Alexandria Ocasio-Cortez on much, But when this plan was announced, she came out and said, hey, what's the deal with $10,000? You guys might as well have just gone after all the student debt and canceled it. And of course, obviously, I don't agree with that. But what I do agree with is her implied message, which is that this move of, saying we'll give you $10,000 in relief is kind of a dickless, kind of cowardly, piece of political strategy. Why is the Biden administration doing it? I mean, are they doing it because they think that it's going to, help solve the inflation problem? No. They're doing it because we're rolling into midterm elections, and the electorate loves nothing more than free shit, freebies, promises of, government solving all their problems, etc. And as we get closer to the election, you want to ramp up that rhetoric so that when those people get into the booth in November and they see, GOP and personal responsibility on one side, and the government's going to help me pay off my student debt with other people's money on the other side, or, in the case of the leaked Supreme Court decision, the abortion issue is on the table now, right? Anything to distract from inflation. When people see that, they're going to be more inclined to vote, or at least, the Biden administration thinks they'll be more inclined to vote Democrat, in accordance with those policies. But the problem with that is, I think a lot of centrist Democrats, I think a lot of people that, there are some centrist Democrats. I mean, you look at a guy like Bill Maher, he's a great example of, a classic liberal, somebody with a semi-libertarian mindset on things, who's self-described, liberal, self-described Democrat, but can also lean towards the center. People like that. And there's a growing constituency of those people, and they're separating from the radical progressives over the last couple of years as cities in the U.S. have gone to shit, and the far left cries for all this nonsense have kind of got to a fever pitch. Those centrist Democrats, if my analysis is correct, are likely going to be insulted by this idea, right? Because, not insulted by the dollar amount, not insulted by, the fact that it doesn't make economic sense, insulted by the fact that it is very clear political strategy. The political strategy is clear. Give people free shit, they will vote for you. And, this is akin to things like Joe Biden saying, if you don't vote for me, you're not black, or whatever he said leading into the presidential election. It's like, okay, a lot of your base may not understand that what you're doing here to try and grab votes, right? Because that's really what it is. It's an attempt to try to grab votes. But as more and more examples like that surface, people further and further from the center start to realize, they're kind of treating me like I'm a little bit of a political pawn here. And that I'm like, like a Pavlovian fucking hamster that, you give me a piece of cheese and I'm going to fucking hit the button that you want me to hit. And so I think that a lot of people are going to find that insulting. And I think that there's a lot of criticisms you can make of people on the right, but generally a lot of the arguments coming from the right side of the aisle just lean more toward personal responsibility, just lean more toward, don't take on debt if you can't pay it back, or you don't want, the obligation of paying it back. You shouldn't be rewarded for being lax in your pursuit of fulfilling your debt obligations. And I think that type of thinking, even though it may not be traditionally what some liberal centrists are used to, is going to make more sense. It's going to outweigh the feelings of kind of being played, the feelings of kind of being potentially a political pawn that may come with this, idea of $10,000 in student loan debt.
Mm-hmm. Chris, one of the last things I think I'd like to touch on with you before maybe we wrap up is your ideas around the crypto market. And, we've talked about a lot of risks today. How susceptible do you think the crypto market is to another repeat of the Luna crash that we just saw, where some people's, entire life savings that are wrapped up all in the crypto market were completely wiped off the map in a matter of hours?
I think it's very susceptible. I think that Bitcoin and Ethereum, in terms of crypto assets, none of which I'm 100% supporter of, but I can understand some of the arguments of the crypto people. I think Bitcoin and Ethereum, out of all of them, have the securest in terms of, what will be the remains of a crypto nuclear holocaust if it occurs. But I think that we need to look, first off, the government is catching on, okay? The government is looking at stable coins. Tether has this thing where they're not really disclosing what their reserves are. They're claiming that everything's backed dollar for dollar. They're claiming they got certain, paper that they're backing their tether with, whatever. Very shady shit going on in the world of crypto. There are Ponzi schemes on top of Ponzi schemes on top of Ponzi schemes. And you don't need to even know dick about crypto. You don't need to be a cryptography nerd. You don't need to understand computers. You don't need to understand the blockchain. All you need to understand is you have several entities out there willing to pay people yields of 5, 10, 15, 20% on their crypto assets that they deposit, supposedly as some kind of yield or some type of dividend. And you have to understand that crypto doesn't inherently generate a yield. It's not a company that generates cash. So that money has to come from somewhere. And where does it come from? It comes from shuffling around of other crypto between all these different companies and, lending and borrowing it and trying to trade it. There are some very big, huge, massive air pockets in the world of crypto. And I think, especially if the market stays risk off and the government kind of tightens their regulations in terms of looking at these stable coins and they start to ask more pointed questions, we're going to find out exactly where those air pockets are. That's not to say I don't think that Bitcoin will survive, because it will, but I don't want to try to put a price on it. I think, to me, personally, I just have a feeling, just based on the hubris, based on the speculation I've seen, that guys like, Michael Saylor kind of need to get carried out of these big, giant crypto positions they have. It just feels like there can and will be major capitulation in crypto at some point. I think maybe even that might be a point where, okay, maybe you want to consider, is this where I want to buy a little Bitcoin? As my listeners and my readers know, I'm not sold on crypto. I'd rather own cash generating, dividend paying U.S. companies, foreign companies that generate cash, that pay dividends. I'd rather own gold. I'd rather own silver, gold miners. There's a list of things longer than my, it's long, that I'd rather own instead of crypto. And I think that, as I said, there are some major air pockets in the $2 trillion crypto industry, and we're going to find out where those are. And for me, I don't want to be heavily exposed to crypto until at all before that happens. I have a very nominal exposure to crypto, and I think, in the wake of that Holocaust, crypto Holocaust, if it happens, pardon the term, but, really a giant Waterloo, whatever you want to call it, that may be a point where, okay, maybe let's start to look at the absolute basics, okay? Like Bitcoin has survived. Bitcoin's going to be here long term. The ledger is secure. So maybe that's when you look at it. But I'm very cautious about crypto right now. It trades like a risk asset. And we're at a point right now where if the Fed holds course, risk assets could still be in for pummeling. We were talking about this before we got on the call, Tom. But, I really, truly believe the market could have significantly more downside here. And I'm worried by the fact that there's a lot of people that think that the worst is over in the market. And, the Fed is eventually going to turn tide and it'll be on its way to saving the market. They don't really have a choice. If rates get to 2-3%, I think the market's got to come down, the equity market, maybe another 20 to 40%. And I think it's going to surprise the shit out of people. I think we still have a lot of margin calls, still have a lot of leverage that needs to get wiped out of the system. We still have capitulation and fear selling and panic that hasn't happened yet. It's been a mostly orderly sell-off to this point. So I think in crypto and in equities, you look for those points of panic. You look for the capitulation. You look for the forced selling. The days when David Faber puts down his papers and, runs from the desk at top speed like he did that one day when he was like, I got to make some phone calls, Wait for the anchors to shit themselves on live television. You want that kind of panic. You want Bill Ackman crying on the phone telling you that hell is coming on CNBC. Those are the moments, okay, maybe we start to look at what does the bottom look like? When can the tide turn, whether it's equities or cryptos? And for the crypto world, until I see a guy like Michael Saylor go bust, I'm not convinced that we've seen real capitulation. Until I see somebody like Alex Mashinsky, okay, who is the CEO of Celsius, who has made, in my opinion, a number of very irresponsible claims about Bitcoin and gold. Until a guy like that and his company wind up getting a comeuppance, I'm not interested in even looking at the crypto space, because in equities, but especially in cryptos, Tom, there's so much malinvestment that still needs to get carried out. And I don't even think we've seen the beginning of it yet.
Mm-hmm. Yeah, it seems like a self-cleansing process that really needs to happen to take some of that leverage and, malinvestment out of that space, I think.
Yeah, almost the way markets are supposed to work, right?
Kind of weird how that should be able to function, right?
Yeah.
Free markets might be able to solve a lot of these problems if they were able to function the way that they're supposed to.
I know. Somebody tell Biden, take the dinner bell and hold it up to Biden's ear and, slam it a couple of times and try to wake him up out of the friggin' stupor he's in, and somebody try to convey that to him. But, as usual, I think it's a fruitless, hopeless effort to hope that anybody will regain any common sense at any point. And I think we will take the worst possible path to where we're going, as we just kind of have a tendency to do. We're just, the government and the Fed, they're just not happy until they've really flown the plane directly into the side of the mountain. And I think that's what's going to happen. So my advice, not to say, and I'm not selling anything, and this is just me. Maybe I'm a paranoid individual normally, but my advice is take as much caution as possible. I don't think we've seen the worst of it yet. And certainly that's my attitude right now.
Unfortunately, you and I both agree there, Chris. I don't think we've seen the worst of it, but I think that both of our audiences have a bit of a leg up on everybody else if they're listening to and thinking about ideas like this, right?
Yeah, I think you're right. I think you do a valuable service. And I would point people to your podcast. I would point people to people like George Gammon and Peter Schiff 10, 50, 100 times before I would tell them to listen to my podcast and read my blog, because I'm like the average person just trying to figure it out. So, I think my analyses are generally rudimentary and bird's eye. And, I think there's probably a certain group of people that benefit from that, especially people that are, the novices and really don't know a whole lot about the industry. But I think for people like your listeners who obviously have a modicum of financial sophistication because they're already listening to your podcast, most of them probably own gold. Most of them are probably, from the Austrian school. I think those people would do well to pay careful attention to what your guests say on your podcast. Consider all viewpoints, turn off the mainstream financial media, and, hold on to your nuts and just try to survive this one.
All right, Chris. Well, that was an excellent, wide-ranging conversation as usual. I appreciate getting your viewpoint on how all of these different pieces fit together from your point of view. Of course, for anybody that doesn't already follow Chris on Twitter at QTR Research, your blog can link from there. QTR's Fringe Finance on Substack. And of course, your podcast on all the major platforms, right?
Yeah. Thanks so much, Tom. I really appreciate you having me on, man. You're great.
Thank you, Chris. I always enjoy getting to chat with you.
All right. Speak to you soon. Bye-bye.
Take care.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.